Well, I've been thinking about something lately. I'm sitting here in Omaha, same old office, same old desk, and I keep hearing folks talk about this market crash that's coming. 2026, they say, maybe sooner, maybe later. And I'll tell you something. I've heard this song before. See, I've lived through, what is it now, 14, 15 market crashes, something like that. Lost count somewhere along the way. But here's the funny thing. Every single time, people act like it's the first one in history. They panic. They sell everything. They swear they'll never invest again. And then the market comes back, like it always does. And those same people, they're standing on the sidelines watching everyone else get rich. Now, I'm not here to tell you I know exactly when the next crash is coming. Nobody does. Anyone who tells you they do is either lying or selling something, probably both. But what I can tell you is how to think about it, how to prepare for it, and most importantly, how to use it. Because you see, a market crash isn't a disaster, it's an opportunity. It's the greatest sale you'll ever see in your lifetime, and if you know what you're doing, well, that's when you get rich. Let me take you back for a second. Back to 2008. The whole world was falling apart. Banks were collapsing. People were losing their homes. The stock market, it dropped nearly 50%. 50. I remember sitting in my office watching the ticker and, well, it was bad, real bad. The news channels were calling it the end of capitalism. People were comparing it to the Great Depression. But you know what I was doing? I was buying. I bought into Goldman Sachs. I bought into General Electric. I put $5 billion into companies that everyone else was running away from. And people thought I was crazy. Warren, what are you doing? The world is ending. My phone was ringing off the hook. People I hadn't heard from in years were calling to tell me I'd lost my mind. But see, I knew something they didn't. Or maybe they knew it too, but forgot it in the panic. I knew that America wasn't going anywhere. I knew that great companies don't just disappear because of a bad year or two. And I knew that when everyone is terrified, that's when you act. There's an old saying, be fearful when others are greedy, and greedy when others are fearful. I didn't make that up to sound clever. I made it up because it's true. It's the whole game, really, and I learned it the hard way, over decades of watching human nature play out in the market. Now, let me tell you something about how I think about crashes. Most people, they see a crash as a loss. Their portfolio goes down 30%, 40%, and they feel poor. They feel like they've been robbed, like someone reached into their pocket and took their money. But that's not how I see it. See, if you're not selling, you haven't lost anything. It's just numbers on a screen. The companies are still there. They're still making products, still serving customers, still earning money, still paying dividends in many cases. What's changed? Just the price. And a lower price? Well, that's a good thing if you're buying. Think about it like this. Let's say you go to the store and your favorite cereal is on sale, half off. You going to complain about that? No. You're going to buy 2 boxes, maybe 3. Maybe you're going to stock up for the whole month. Stocks are the same way. When the market crashes, it's like the whole store is having a clearance sale. Everything's half off, and yet people run out of the store screaming. They're trampling each other to get to the exit. Doesn't make much sense, does it? But that's human psychology. That's fear. And fear makes smart people do dumb things. Now, I'm not saying you should just throw money at anything during a crash. That'd be foolish. That'd be like buying every item in the clearance bin just because it's cheap. Some things are cheap for a reason. You still need to be smart. You still need to know what you're buying. But here's the thing. If you've done your homework before the crash, if you've been watching companies, studying them, understanding their businesses, waiting for the right price, well, the crash is your moment. It's like being a farmer. You don't plant seeds in the middle of a drought and expect them to grow. You wait. You prepare the soil. You watch the weather. You get everything ready. And when the rain finally comes, that's when you plant. The market's the same way. You prepare during the good times and you act during the bad times. That's the entire strategy in one sentence. Let me tell you about Coca-Cola. I bought Coca-Cola in 1988, paid about $1 billion for it, biggest investment I'd made up to that point. And people ask me, Warren, why Coca-Cola? It's just sugar water. What's so special about sugar water? And I'd say, well, yeah, but it's sugar water that people have been drinking for 100 years, and they're going to keep drinking it for another 100. See, I can predict that. I can't predict what the next hot tech gadget's going to be. I can't tell you which social media platform will dominate in 10 years. That stuff changes too fast. It's outside my circle of competence. But Coca-Cola? I know Coca-Cola. People loved it in 1888. They loved it in 1988. And they still love it today. That's a pretty good track record. That's what I look for. Simple businesses. Businesses that aren't going anywhere. Businesses that even a fool could run. Because sooner or later, one will. I actually stole that line from someone, but I can't remember who. Might have been Charlie. Everything good I ever said probably came from Charlie. Now, during the 2008 crash, Coca-Cola's stock dropped. Did the company get worse? No. Did people stop drinking Coke? No. They might have switched from restaurants to buying it at the grocery store to save money, but they were still drinking it. The stock just got cheaper. If I didn't already own it, I would have backed up the truck. See, that's the secret. You don't need to find the next hot tech stock. You don't need to gamble on some startup that might be the next Amazon. You don't need to understand artificial intelligence or blockchain or whatever the new buzzword is. You just need to find boring, investing is. They think it's about making quick money, trading in and out, timing the market, watching charts and indicators and all that stuff, moving averages and RSI, and I don't even know what half of it means. But that's not investing. That's gambling. That's speculation. And look, I'm not going to sit here and tell you nobody makes money gambling. Some people do. Some people get lucky. But that's the key word, lucky. Investing, real investing, is about owning a piece of a business and then letting that business work for you for years, for decades. It's about patience and patience. Well, that's the hardest part, because when the market crashes, patience feels impossible. You watch your account drop every day. Your friends are panicking. Your family's asking if you're okay. The news is screaming about the end of the world. And every bone in your body is telling you to do something. Sell, get out, cut your losses, anything. But the right move is to do nothing, or better yet, buy more. Let me tell you a little story. Back in the 1970s, I bought a textile company called Berkshire Hathaway. Worst investment I ever made, by the way. Terrible business, dying industry. I bought it because I was mad at the guy who ran it. That's not a good reason to buy a company. I was young, I was stupid, I was trying to teach someone a lesson. You know what I learned? The market doesn't care about your ego. But anyway, in the early days, I was managing money for some partners. Limited partners, they were called. And the market was all over the place. Up one year, down the next. Sideways for years. This was the 60s and 70s. Not a great time for stocks. And I remember one of my partners came to me real worried. Nice guy. Dentist, I think. Or maybe a doctor. He said, "Warren, should we sell? Should we get out? I'm losing sleep over this." And I told him, if you can't handle watching your investment drop 50% without panicking, you shouldn't be in the stock market. That sounds harsh, I know, and I felt bad saying it, but it's the truth. Because the market will drop 50%, maybe more. It's not a question of if, it's a question of when. And if you're going to sell every time it drops, you'll never make any money. You'll just buy high and sell low, over and over again. That's the worst strategy you could possibly have. And yet, that's what most people do. Now, let me talk about what you should actually do when the crash comes. First thing, don't panic. I know. Easier said than done. Believe me, I know. Even after all these years, even knowing what I know, there's still a little voice in my head during crashes saying, maybe this time is different. But it never is. It feels different. It always feels different. In 1987, it was program trading. In 2000, it was the dot-com bubble. In 2008, it was subprime mortgages. Every crash has a different story, but the ending? The ending's always the same. The market comes back. So don't panic. The crash is not the time to make big decisions. It's the time to stick to your plan. If you've been investing regularly, keep investing regularly. Don't stop. Don't try to time the bottom. Don't try to be clever. Just keep putting money in. It's called dollar cost averaging. Fancy term for a simple idea. You buy a little bit every month, no matter what the market's doing. When it's high, you buy fewer shares. When it's low, you buy more shares. Over time, it all averages out, and you end up doing pretty well. Better than pretty well, actually. You end up beating most of the professionals. Second thing, make a list. Before the crash happens, I want you to sit down and make a list of companies you'd love to own. Companies you understand. Companies that make products you use. Companies that you think will still be around in 20, 30 years. Write them down. Study them. Know what they're worth. Figure out what a fair price would be. Figure out what a great price would be. And then just wait. And when the crash comes and those companies go on sale, you'll be ready. You won't be scrambling around trying to figure out what to buy. You won't be paralyzed by all the choices. You'll already know. You'll just be waiting for the price to be right. It's like going to an auction. If you show up without knowing what you want to bid on, you're going to make mistakes. You're going to get caught up in the excitement. You're going to overpay. But if you walk in knowing exactly what you want and exactly what you're willing to pay, you're going to get a good deal. Third thing, keep some cash on hand. Now, I'm not saying you should sit on a pile of cash forever waiting for a crash. That's a mistake too. Because if the crash doesn't come for 5 years, you just missed 5 years of gains. and those gains compound. That's a real cost. But having some cash, maybe 10, 20% of your portfolio, gives you dry powder, gives you the ability to act when everyone else is frozen. When everyone else is forced to sell because they're over-leveraged or they need the money or they're just too scared, you can buy. It's like having an umbrella. You don't carry it around every day hoping it'll rain, but when it does rain, you're glad you've got it. And in the stock market, it rains regularly. You know, people ask me all the time, Warren, what's the best investment you ever made? And they expect me to say Coca-Cola or Apple or some stock that made me billions. And those were good investments, don't get me wrong. Apple especially, I was late to that one, but it's worked out pretty well. But the truth is, the best investment I ever made was in myself. I spent my 20s and 30s just reading, learning, studying businesses, going to the library, reading annual reports, reading about other investors, talking to smart people. I didn't have much money back then, but I had time. And I used that time to get better. See, that's the thing about investing. It's not just about money, it's about knowledge. The more you know, the better decisions you make. And better decisions, well, they compound over time, just like money does, maybe even faster than money does. So if you're young, if you're just starting out, don't worry so much about having a big portfolio. Worry about building a big brain. Read everything you can. Learn how businesses work. Learn accounting, not the complicated stuff, just the basics. Learn to read a financial statement. Learn how to think. Because when the crash comes, the people who've done the work will be ready. They'll know what to do. And the people who haven't, they'll just be scared. They'll be calling their friends asking what to do. And their friends, they'll be just as scared. Now, let me tell you something that might surprise you. I don't think about money the way most people do. I mean, sure, I've got a lot of it, more than I could ever spend, more than anyone could ever spend, really. It's kind of ridiculous when you think about it. But that's not why I do this. I don't wake up every morning thinking about my net worth. I don't look at my portfolio and feel rich or poor based on what it says. I do it because I love the game. I love finding great businesses. I love watching them grow. I love the puzzle of it all. It's like playing chess, but the pieces are companies and the board is the whole economy. And the crash is just part of the game. It's a challenge, a test. Can you keep your head when everyone else is losing theirs? Can you see opportunity when everyone else sees disaster? Can you act when everyone else is paralyzed? That's what separates the good investors from the great ones. It's not intelligence, it's not education, it's temperament. Let me tell you about my partner, Charlie Munger. Charlie passed away not too long ago, and I miss him. I really do, every single day. We worked together for, 60 years? Something like that. More than half a century. Talked on the phone almost every day. And Charlie was smarter than me. I'll admit that. He won't mind me saying it now. He could see around corners I couldn't even see. He'd read everything: philosophy, psychology, physics, history, everything. And he'd synthesize it all in ways I never could. But you know what Charlie taught me that was most valuable? He used to say, "The big money is not in the buying or the selling, it's in the waiting." The waiting. See, most people, they can't wait. They get bored. They get anxious. They want to do something. They want to feel like they're being productive. But the best investors, they're comfortable doing nothing. For years even. They buy a great business, and then they just sit on it. They let it grow. They let it compound. They don't check the stock price every day. They don't worry about the quarterly results. They just wait. And 20, 30 years later, they wake up rich. It's not complicated, but it's not easy either, because waiting requires discipline. It requires confidence. It requires ignoring everyone around you who's doing something different. You know, I think about my dad sometimes. He was a stockbroker, lost a lot during the Great Depression, and I think that's probably why I became obsessed with not losing money. I saw what it did to him. I saw what it did to our family, and I made a decision real young. I was probably 6 or 7 years old. I decided I never wanted to feel that way. I never wanted to be in a position where I was desperate, where I had to sell something because I needed the money. So I've always been conservative, maybe too conservative sometimes. I've got 2 rules, you know. Rule number 1, never lose money. Rule number 2, never forget rule number 1. People think I'm joking when I say that. They laugh, but I'm not joking. See, if you lose 50% of your money, you need to make 100% just to get back to where you started. That's a long road. That's a hard road. And some people never make it back. So the key is just don't lose it in the first place. And the way you do that is by being patient, by being disciplined, by not doing stupid things, by not using leverage, by not betting everything on one idea, by not panicking during crashes. Boring, I know, but it works. So let's talk about 2026. I don't know if the market's going to crash then. Maybe it will, maybe it won't. Maybe it'll crash in 2027 or 2025 or tomorrow. Doesn't really matter because crashes are inevitable. They're part of the deal. If you're going to be in the stock market, you're going to live through crashes. That's just how it is. But let's say it does crash. Let's say the market drops 30, 40, 50% over the next year or two. What are you going to do? Are you going to panic, sell everything, hide under your bed, or are you going to take a deep breath, pull out that list of companies you've been watching, and start buying? Because I'll tell you right now, the people who buy during the crash, they're the ones who get rich on the other side, not the ones who sold, not the ones who panicked, the ones who stayed calm, the ones who saw the sale for what it was. Let me tell you something else. During every crash, every single one, people say, this time is different. This time it's really bad. This time the system might not recover. I heard it in 1987. I heard it in 2000. I heard it in 2008. And I'll hear it again next time. And you know what? It's never different. Oh, the details are different. The story is different. But the outcome is the same. The market recovers. America recovers. Business continues. Why? Because people keep innovating. They keep solving problems. They keep waking up every day trying to make things better. And as long as that's happening, the economy grows. And if the economy grows, the stock market grows. It's really that simple. Now, I want to talk about something uncomfortable. Fear. See, during a crash, you're going to feel fear. Real fear. The kind that keeps you up at night. The kind that makes your stomach hurt. You know, I think one of the biggest mistakes people make is they think investing is complicated. They think you need fancy software, you need inside information, you need to understand complex derivatives and option strategies. But that's not true. Investing is simple, not easy, but simple. You find a good business, you buy it at a fair price, you hold it for a long time. That's it. Everything else is just noise. The talking heads on TV? Noise. The hot stock tips from your brother-in-law? Noise. The predictions about where the market's going? Noise. Just focus on the business. Is it a good business? Does it make money? Will it still be making money 10 years from now? If the answer is yes, buy it and forget about it. Let me tell you about a mistake I made. In the late 90s, during the dot-com boom, everyone was making money in tech stocks. Everyone. And people kept asking me, "Warren, why aren't you buying tech stocks? You're missing out." And I'd say, "I don't understand them. They're outside my circle of competence." And people thought I was old, out of touch, past my prime. And you know what? For a while, they were right. I was missing out. The NASDAQ was going up 50, 100% a year. But I stuck to what I knew. Boring old companies, banks, insurance, consumer goods. And then the bubble burst. All those tech stocks that everyone was so excited about, they dropped 90, 95%. Some of them went to zero. And suddenly, being boring didn't seem so bad. The lesson? Stay in your circle of competence. Don't chase things you don't understand. It's okay to miss out. Really, it's okay. Better to miss out than to lose everything. So as we think about 2026, or whenever the next crash comes, I want you to remember a few things. First, crashes are normal. They're healthy even. They clear out the speculators. They reset valuations. They create opportunities. Don't fear them. Expect them. Prepare for them. Welcome them. Second, focus on businesses, not stocks. When you buy a stock, you're buying a piece of a business. So think like a business owner, not a trader. Would you sell your business because the stock market went down? Of course not. So why would you sell your stocks? Third, be patient. This is the hardest one, but it's the most important. Wealth compounds slowly, very slowly. But if you give it time, it compounds to incredible amounts. I've been investing for 70 years now, maybe more, and most of my wealth was made in the last 20 years. That's the power of compounding. But you have to stay in the game long enough for it to work. You know, I'm 90-something years old now, 94, I think. Might be 95, I lose track. And I've seen a lot. I've seen wars, I've seen recessions, I've seen booms and busts and everything in between. And through it all, the stock market has gone up. Not in a straight line, no. There have been plenty of years where it went down, sometimes for several years in a row. But over time, it's gone up because the American economy grows, businesses grow, innovation happens, people solve problems, and if you own a piece of that, you get to ride along. It's really that simple. Now, I want to leave you with one last thought. Investing. It's not about being the smartest person in the room. It's not about having some secret formula. It's about being reasonable, being patient, and not doing anything stupid. That's it. That's the whole secret. If you can do that, if you can stay calm when everyone else is panicking, if you can buy when everyone else is selling, you're going to do just fine. Better than fine, actually. You're going to get rich. Not overnight, not in a year, probably not even in 5 years, but over time, slowly, steadily, like a snowball rolling down a hill. It starts small, but it picks up snow as it rolls, and it gets bigger and bigger, and by the time it gets to the bottom, it's huge. That's compounding. That's wealth building. So when that crash comes in 2026, or whenever it comes, I want you to remember something. The crash is not the end. It's the beginning. It's your chance, your shot, to buy wonderful businesses at wonderful prices. Don't waste it. Don't let fear rob you of the opportunity. You know, someone once asked me, Warren, if you could give one piece of advice to a young investor, what would it be? And I thought about it for a while, and I said, read everything you can, and then be patient. That's it. That's all you need. Read, learn, and wait for the right opportunity. And when it comes, act. All right, I think that's enough from this old man. Go out there, do your homework, make your list, and when the time comes, be brave. Because on the other side of fear, that's where the opportunity is. That's where the wealth is. And that's where you want to be. Good luck out there. I mean that. And remember, it's not about timing the market. It's about time in the market. Stay invested. Stay patient. Stay disciplined. And in 20, 30 years, you'll look back on the crash of 2026, and you'll realize that's when everything changed for you. That's when you made your fortune. Now, where'd I put my Coca-Cola? You know, some things never change.